The real estate investing show, our live stream, where we're going to be talking today about growing your real estate portfolio with a mortgage using other people's money, loan situation. That's what we want to talk about. And I'm going to go through 5 different points today on the show, things you need to look out for to prepare yourself for going through that loan process, some pitfalls, so to speak, to prepare you for that loan process. So we will dive into that. But we're going to welcome everybody in first, allow them to join, because usually YouTube sends out their alerts and it takes like 10 minutes for people to show up. So let me know if you get your alerts wherever you happen to be watching this, on Facebook or on YouTube. Hope everyone is doing well today. I was outside in the wind, so that I apologize for the hairpiece being blown around. I need to get a haircut. That's for sure. Hello, everybody. Pull up my streaming chat here. And as always, we will open it up for Q&A a little bit later. Lindsay's here. Bill, welcome back. Bill Perdue is here. Sandy is here. Good to see you. Toff Goff is here. Good to see you. So we're just waiting for a few more people to get here. Let the algorithm catch up to itself and do its thing. Tom and Lori Bellino, nice to see you. Welcome. Where are you guys joining us from today? Illinois. Growing a beard. You could say like, hey, I'm growing a beard, Lindsay, or you could say like, I'm just too lazy to shave. One or the other. I shaved on Sunday. So this is 2 days growth. I'll probably shave tomorrow. Boise, Idaho. Cape Cod. I'm reading a book right now called Cod by Mark Kurlansky. He wrote the book on salt. I love these sort of one crop or one item things that a whole historiography could be written about, how it changed the course of human history, like salt, his book on salt. But his book on cod is so eye-opening. And of course, Cape Cod, named after the fish. And all of the like state house and government buildings all through that area all have images of cod on the, like, outside of the doorways. You'll notice like carved in stone or cod faces, and because it was so important. Yeah, I should grow it. I do like the beard once in a while. It just gets so itchy. You get through the itchy phase and then it's okay. Toff, where do I get my coffee? I remember you mentioning it on your Morning Investor show, but forgot to write it down. Oh, Nespresso? Are you talking about Nespresso? They're there's a company that I used to get it from, and I don't know if they're still in business or not. Blue Bottle Coffee bought them. Blue Bottle Coffee is awesome. Let me see if I can pull it up here. Let's see, Blue Bottle Coffee. So Blue Bottle bought what is known as Tonks, TONX.com, Tonks Coffee. Help if I plug in the laptop before you can see it here. So guys, this is our little pre-show, just welcoming everyone in. Yeah, this is it here. Let's see if this will work. I've not tried Life Boost coffee. Here we go. So Blue Bottle in San Francisco, there'd be a line out the door for Blue Bottle coffee in San Francisco. And so delicious. They'll do like a pour over coffee, then it'll take like 5 minutes for them to pour it, and it's delicious. So I used to get my beans from Tonks, TONX.com. But then Blue Bottle bought them. And now, that looks good. New Orleans style iced coffee. Yeah, sign me up. So now they bought them, and now they started shipping their beans directly. So now you would get Blue Bottle coffee shipped right to your door. And I guess you can try it for free, and you get a free bag to try it. But I am a huge fan of Blue Bottle, and I was a huge fan of Tonks, but they just rolled them in. And every month or every few weeks they have different regions that they pick. They do like different things from, Peru and other places like that. So Guatemala, Ethiopia, but they would source their beans. I know this is not a coffee show, but quite delicious. So yeah, that Blue Bottle is the one that I loved. Oh yeah, that's right, Nicole. Great point. So when someone becomes a client with Morris Invest, we actually send out, as a thank you for joining our team and becoming a part of our family, we send out bags of coffee and a nice mug from Feed. They then feed children lunches in underserved communities with every bag that's purchased. What's the URL of that? Bill got his. How are the beans, Bill? Yeah, they do fresh roasting. Send it right to your door. Yeah, so check out Feed. That'd be another great subscription. Like we'll give you one for free if you become a Morris Invest client, but then set up a subscription later on that you can helps children in underserved areas, but also get great fresh beans delivered right to your door. Okay. All right. Ready to get started, everyone? Hopefully the YouTube algorithm has sent out the proper alerts to everyone to join us in these dog days of summer here in August. All right, here we go. Welcome to the Real Estate Investing Show. Hope you guys are doing great. Today on the show, I want to talk about how to set yourself up for success with a real estate mortgage loan that you're going to use for real estate investing. There are a number of steps, the things you want to prepare for before you get that loan, before a bank might be willing to work with you. But I'm a big proponent of working with other people's money and utilizing other people's money in the form of low interest financing right now to increase your portfolio. So when you're growing your real estate portfolio, you're likely to utilize a few different lending options. And if you've ever been through this process, you know that it can be absolutely grueling. Lenders are going to ask you for a ton of documents, credit checks, statements, proof of employment, personal info, etc. I've been through this process a number of times myself, and I always hear stories from my team on a regular basis about what they go through with different lenders. And in fact, even today, my wife and I were sitting down at a bank dealing with a closing on a property and said, "Oh, we apologize. We had this one more document that we needed to sign. We forgot it last week. Would you mind signing it?" And we literally had to drive 30 minutes to deal with this one document. I said, "No problem. We're so used to it. Don't worry about it." Once we get through that process, though, we know the cash flow and the power of that asset, right? If it was super easy, everyone would be doing it. Well, at Morris Invest, since we offer financing on our properties, we sometimes see clients face some turbulence when applying for these loans, simply because they didn't realize what goes into this loan approval process. And it can be really a nice little delicate balance. And there are certain things that you should never do when you're applying for a loan. So I'd like to go through some of these things and to prepare you so that when you are about to get a loan, you have these things already taken care of. You've checked these boxes, and they won't be a surprise when you're about to become an investor. So today I'm going to run through just a list of 5. These are 5 things you don't want to do that banks want you to avoid, okay, when you're going through the loan process. You do not want to do this. The sooner that you know these little hints, the better off you're going to be, okay, in the long run. And I hate to see someone lose out on a deal because of a lack of understanding on this. So let's dive into these don'ts. And now this list comes directly from lenders that we work with, and they are the consistent team across the board for our recommendations. So these come right from the lenders' mouths. We reached out to them and said, we're going to put this list together. What are some things you would love to tell our audience? So number 1 on the list is don't use a cash advance from a credit card for the down payment during the loan process. This could really create a ding on your credit score for a larger amount of revolving debt. Now, look, back when I was just getting started in my career, I would get these credit cards. I went massively into credit card debt. I had a very bad relationship with money when I was younger. It was not good. And I had these credit cards that I would use these cash advance options, right? Where you could even get these cash advance checks. You know, they would send you a pile of checks and you're like, wow, that's great. I can use checks. I can write checks for anything. Don't do it. And then you realize like, oh my gosh, what interest I'm paying on these things. But it's not even like the normal interest, okay? Because then it becomes even larger amount of interest and it's treated differently than just like taking your card and going to the store. It's treated differently. And they're giving you extra dings on your credit for taking advantage of these things. This could really create a larger problem for your credit score because of the revolving debt. And it can actually play a big factor in your eligibility. And in a small way, you might not even be paying attention to it. And this thing can really alter your credit score substantially. So be careful what funds you use to pay down the payment. I would love to hear from you guys. Drop me a comment below. Have you ever used these cash advanced options? I mean, I know not only the checks, I've gone to the ATM and taken money out that way. And you're like, hey, there's free money, right? Money from my checking, my credit card. You realize how when you're older and you realize how stupid you are. And, and you realize like later on how this is going to come back to bite you in the butt. You wish you wouldn't have done it. And so the possibility of being denied for a loan because of it can really cause your interest rate to be bumped up as well. We work with a sponsor occasionally. They're not sponsoring this episode, but I will mention them. If you go to scoremaster.com/invest, you can literally have 97 points on your credit score fixed by using them. Again, they are not sponsoring this show, but I am a huge fan of them. And what they point out is that you can save a boatload of money on loans, car loans, home loans, just by altering a few points on your credit score. So again, I'll put a link below in the description. You guys can check it out. Go to scoremaster.com. And if you use our code INVEST, so scoremaster.com/invest, again, they are not sponsoring this show, this episode, but they've set it up so you can try it for free. And I'll share our code with you so you can try it and see if you can get about 97 points added to your credit score. So, you need to be prepared to explain, possibly even writing a letter to the bank where your payment where your down payment is going to come from if it isn't already in your account. So if you don't have this money in your account, don't think about using cash advance from a credit card, because they're going to look around and say, well, okay, you're going to have to make a down payment here of about $45,000 or $50,000. Where's that money? And you're like, oh, don't worry about it. I have a credit card. I'm just going to take a cash advance. No, red flag, danger, Will Robinson. Don't do it. Yes, you'll be able to give them the cash, but now your credit score changes and it totally alters the loan structure. Don't do it. Number 2 on my list. Don't apply for any new credit cards while your loan is processing. Definitely don't do this. And really don't be applying for any type of credit while you're going through this process, because it is seen as risky. You definitely want to wait to apply for that new store credit card, that new Victoria's Secret credit card that they try to get you at checkout. Hey, you can save 10% off here if you sign up for the Victoria's Secret credit card. Don't ask me why I know that. Or Macy's. I never had a Victoria's Secret card, but I did have a Macy's card that I totally forgot about back in my ignorant days of setting up credit cards willy-nilly and going into debt when I was in my 20s. It wasn't until I really became financially literate into my late 20s, early 30s. I had a Macy's card that I totally forgot about from some stupid $21 purchase. Totally forgot about it. I moved in the meantime, so when they sent me my statement to pay the bill, I never received it. That ended up dinging my credit. Whole other problem I don't want to get into. But it's more of a pain to sign up for those stupid cards when you're checking out, at Abercrombie and Fitch or Macy's or whatever you're buying. Don't do it. Okay? Just pay with your other cards or just pay in cash. Because what happens is you don't want to be buying a new car either or getting a new car loan. We had somebody not too long ago that was in the process of getting a home, going through the mortgage process, and the husband was stupid and went out and bought a new car and got a loan on a car while they were already drawing up all the paperwork. Huge problem. Now the lender's like, whoa, this person really loves to put a lot of stuff on credit. Maybe we want to revise this loan and jack up the points a little bit here because the interest rates, because maybe this person is as good with their money as we thought they were. Again, any more open debt on your credit report will affect your eligibility and your interest rates. So be careful. Number 3, this is a little bit difficult to say, but don't quit your job. Okay. I know. Look, if you've had a fight with your boss or you can't handle the commute anymore, you don't want to drive the 2 hours anymore to and from work. I get it. But if you're a few weeks away from completing a loan process, I can tell you that, a bank loves when you have a job. Okay. You know how difficult it is to be a person trying to get a loan when you are trying to show like self-employment income? Not easy. They're much happier if you are a drone in the system working for somebody else on a W-2 employment salary. It's consistent. They know they can count on it. It's way easier in the process. Now, it might not be good for you personally, and we'd love to, that's why you're watching this channel, so you can become a real estate investor and break out of that eventually. But during the loan process, just hang on for a few more weeks. Not only do lenders like you having a job, they like a consistent job history. So don't quit and then hop to another job. Oh, yeah, I just started another job. They're going to say, wait a second. How much do you like to hop around jobs? Just stick it out a little bit longer. Number 4, this is an important one that a lot of people don't think about. And I've seen this come back to bite myself in the butt a number of years ago. But you want to avoid moving large amounts of money in and out of your primary bank accounts while your loan is funding. That's red flags. Like, why is this person moving all kinds of big money in and out of their primary account? It's not consistent. And banks like consistency. Now, it's okay for banks to do this themselves, right? But, we know how Wall Street is. We know how these big banks can do it themselves. They're happy to do it and defy all kinds of rules. But for you, they want to see that you're consistent. Pretty much just try to keep all of your accounts the same size until your loan is finalized. Seems simple, right? I mean, we've heard so many stories of people just not thinking about that, and they decided to move $50,000 over here, over there, and now they have to explain this, and they have to create a workaround because of a silly mistake. It could alter things, and you don't want to do that. So just keep it where it is. Don't move a lot of stuff until you're through the loan process. Number 5 on my list, keep all of your credit accounts current. Don't let any payments go unpaid or unattended. Pay your bills. You know, I know we've all been there. We've forgotten a month in our lives. We missed that electric bill because it didn't show up. Maybe something happened in our credit card or auto pay and it didn't happen. But as you're going through the loan process, set your reminders. Put it in your calendar. Or, I mean, yes, auto pay is way better for your existing bill pay accounts. Don't leave it to chance. Make sure that all of these things are current. Because if you start defaulting on anything during this process, you are going to have a big problem going through the loan process. And it honestly, it can be that one little stupid thing. I had a Capital One account with a $1 balance issue that ended up becoming a credit problem for me for years until I got it fixed. $1 on a Capital One card hurt my credit in a big way, and actually it damaged my ability to get a loan when I was first starting the real estate journey. So I had to get creative. I had to borrow from my 401k. I had to do some other things because my credit was screwed for a couple of reasons. Number one, I had a lot of revolving debt. And number 2, I had this issue on my credit score. So these are 5 simple ways that you can prevent trouble with the bank. These are the most glaring don'ts that our team discussed regarding our loan preparation with our lenders that we work with. And there are also a lot of things you will have to do in order to prepare during that application process. And the more prepared you are, the easier the process will be for you and the lender. And I'm going to drop a document in the description box below that's going to help you prepare for the loan application process as well. It's totally free. We'll have a link to this below so you can use it. This information is directly from our lenders that we work with, and it's standard practices. There shouldn't be any surprises in this process. You know, one of the things I will say that when Natalie and I have been preparing for loans, the reason we're able to do it so quickly is because, and she's the organized one, has all of the drop boxes or your Google Drive or whatever, folders on the desktop with the tax returns, all of the things that you're going to need for that loan process, have them digital, have them be ready to go. Put them in a folder that you can share immediately with a lender. So on the first day you're going through this process, our lenders are always stunned at how organized my wife is. I'm giving her credit. They'll say, oh my gosh, we never see people this organized. This is amazing. So when they ask for like the 30 documents they need for the process, they're all right there in the folder. She's digitized them. They're all dragged right there. Share that Google Drive with the lender. Boom. And you get that nice compliment on the back end. But check out that link below in the description so you are prepared for the loan process. I'd love to open it up for some Q&A here. Pratop says, yeah, this is very true, Clayton. Never move money. I've learned it the hard way. Oh yeah, Pratop, what happened? Yeah, and Bill, yeah, trying to buy a car, it really lowers your credit score quickly. You have to remember those banks are not in. They really compete with each other. You know, the mortgage loans and the bank loans, and frankly, bank loans are seen as far riskier these days in many ways. And I'm surprised this bubble hasn't burst yet. To be honest with you, you're basically getting 0% interest loans for these cars. There's what had happened in 2008 during the credit default swap nightmare that they made into the movie The Big Short has essentially been happening in the car space for years. And I've read a number of pieces about how this is like the other shoe to drop. It hasn't, and maybe the pandemic threw a wrench into it, but because of these, like, you know, a lot of people just are able to walk in and turn around, walk right out the same day with a car. Sound familiar to what happened in 2008? So it's seen as riskier. And that's why repos, they're ready to jump on these things. Oh, you moved money between your account. Yeah. What all is asked if you're using an LLC instead of getting a loan under your own name? Well, certainly if you're going through, I mean, it depends, right? So we work with different lenders that allow you to use an LLC and doing some, you know, different conventional plays, but also on the non-recourse side, it's going to be a much different process. We should do, I mean, it might be a little too nichey of a video to do or a topic, but we should do like how to prepare yourself for a non-recourse loan process. and what are the things that have been asked in that process. Might be a little nichey, but hey, I'm willing to do it. Vitali Matov. Clayton, am I saying your name right, Vitali? Clayton, do you know any banks that deal with people with mid-600s credit score? Also, have you ever done a 203K loan? I personally have not done a 203K loan. But Vitali, yeah, I mean, really anything over 620 is going to get you in the door. You're going to have a higher interest rate. But Vitali, have you checked out what I just mentioned, which is scoremaster.com/invest? Maybe somebody can drop that into the chat here, scoremaster.com/invest, because one of the things that they talk about is being able to raise your credit score by about 97 points in, not too long. They can do it in a few weeks, actually. Yes, you can absolutely use a non-recourse loan, Jackie. And Jackie, if you're interested in commercial property, I mean, well, if you're looking beyond, so when I say commercial, I mean multifamily. We at Morris Invest have duplexes. That's our specialty. New construction duplexes that with our team, we're already placing tenants in there, so it's cash flowing, and it's fully done for you service. So it's not something that you'd have to do separately. Let me just show you our website. If you're interested in the full service rental real estate experience, that's what we do at Morris Invest. And here's our website. So if you go to morrisinvest.com, you can click on the book a call button right there on the front page, and a little thing will pop up so you can learn what we do. New construction. You can start your first rental investment 3 steps. Schedule a call with us. We'll jump on the phone with you. So you'll give us your phone number, and we'll give you a call at the time that you select on the calendar. Then we'll really talk about your goals. I think that's the most important thing, is to talk about what your goals are for investing. And then we have properties that we build new construction from the ground up, and mostly in West Texas. That's our primary market, and some other markets in Texas that we've just announced. So if you're interested in that, duplexes and single families, cash flowing, and these are neighborhoods that have the best school districts. So we build in the best school districts. So we have a waiting list for tenants in the property, so that way we can also command a very nice rent and consistent cash flow in expanding markets. That's where we focus, in job markets with low crime and high job growth. That's what we focus on. So Jackie's saying, I have a duplex, but I'm looking at commercial property, non-residential. Gotcha. Pratap says, hey, Clayton, what do you think of a 5.5% APR, 2.5 points on non-qualified loan? On a you mean non-recourse loan? Is that what you mean? Look, I think a lot of non-recourse loans end up, if you do it yourself or you try to do it, like we have great relationships with our non-recourse lenders, so the interest rate is going to be substantially lower than if you do it on your own. Non-recourse, I've seen non-recourse loans that are upwards of 12, 13% interest. John, no, our waiting list is not long. John, why don't you book a call with our team, and we'll talk with you the process. So that way we can start, going through your goals, have our first phone call or so with you, and then go through the process of identifying a property fit that matches with you, whether it's a single family or duplex, and what your price range looks like. And then we can start to line up the financing. Because our goal internally is we want you to keep as much of your money in your pocket as possible and use the bank's money at these historically low interest rates. And because we're building all new construction with, vaulted ceilings and stainless steel appliances and granite countertops in the best school districts, yes, we have a very high demand for our properties, as you can imagine. We're building 600 of them this year for the rest of the year. And so, yeah, please, but go ahead and book a call with us. Pratap, I know that's great. And so the conventional loan process. So Pratap has 3 properties with us. That's awesome. So you're talking about a conventional loan process on a non-qualified loan. I mean, look, when you hear, all I want to say is when you have, think about the early 1980s, right? And by the way, I have 5.75 interest rates on some of my loans. But think about the early 1980s when interest rates were upwards of 18 and 19% for mortgages. Now think about the cash flow and the return on investment. If you're able to buy and acquire assets with somebody else's money and you're cash flowing and creating net worth and you're getting the tax benefits and the cash flow above and beyond what you're paying for a bank, that's a win-win to me. You know, I had one of my mentors, Robert Sheeman, a number of years ago he said, I would buy, how did he put it? He said, I would buy a property for 12% interest if I was getting a 13% return. I thought that was a great way to put it, right? And he meant net, of course, not after expenses. But and he's like, that it adds to my net worth. I get the cash flow. I'm able to acquire more assets. I get the tax shelter. And if I can buy it for 12% and I'm getting a 13% net return, I'll take it. And I thought that was a great way to put it. So yeah, I think that's great. But even at 4% with a 1.5 point, yeah, I mean, look, that's why we work with over 60 different lenders internally. And so we're going to based on your credit score, we're going to match you up properly. But I would also check, go through that process right now and try to fix, add some extra points to your credit score. That's why we did this whole video today. So again, go to scoremaster.com/invest. Again, they are not a sponsor. I just really believe in what they do. They've been fantastic. I've had so many testimonials from people who watch our shows who've told me they've used them. They've raised their credit score in like a few weeks just by using them. So try it for free, see what you can do. Any other good questions here, guys? Thank you, Pratap. Pratap says, everything is very correct what Clayton just said. It's true. It's Kristen says, guilty. Credit cards are evil. They are. Well, the United States revolves around credit. If you use it correctly, it can be powerful. If you use it incorrectly, it can really be life-altering, in a bad way. So, the United States is a credit-based economy. That's the way it works, a debt-based, credit-based economy. We moved off the gold standard in the 1970s. Instead, we replaced it with debt. If you understand how to use debt, it can be very, very powerful. It can be life-changing. It's how billionaires use it. Millionaires use it effectively. That's how we use it here, right? That's how you're using it as a real estate investor. But if you use it the wrong way, which is getting into massive credit card debt and buying liabilities, that's what the poor and middle class do. That's what they do, and they don't understand how this process works. And then you're a slave to these banks in the wrong way. Yeah, I mean, 620 credit score, again, it all depends. Like the higher your credit score, and it really depends. I think it's like on 20-point increments. I'm not sure, given the pandemic, if any of that's changed and how they've changed ratings on that, but that's why it's worth having those conversations so they can look at your total assets, your total cash flow, your debt to income ratio, all of that. Real estate Chris says, Clayton, can you do a 1031 exchange from the sale of commercial property, small supermarket, into residential apartments? Does it matter the property type? Great question. It's like and kind. So I don't think it's as, correct me if I'm wrong, a couple of my team members are here right now. Am I wrong about that? I don't think it has to be like trading a supermarket for a supermarket. I think it just has to be, does it have to be condo to condo or single family to single family? Maybe it does. Nicole or Kelly or Lindsay, anybody who, drop a link in here to our preferred 1031 team member that we work with and can answer that question directly. Because obviously it has to be a like or kind It has to be a like or kind transaction. I don't know if it's as granular as that, though. I mean, I've had certainly, I've definitely, we've done a lot of 1031 exchanges at our company. People who've, had really overly priced single family homes or whatever in California, and then they've converted those through a 1031 exchange into highly profitable, high ROI properties with us. But I don't know to go from like a supermarket to that. I think if it's commercial, supermarket to apartment is fine. They're both buildings. Okay, so yeah, but I'm not sure though if it's commercial to commercial. It has to be commercial to commercial. You can't go commercial to residential. And if it's apartment, if it's over 5 units, then that counts as commercial. Anything over 4 units is commercial. So I'm not sure about that. That's a really good question. And I can't believe I don't know that answer off the top of my head. I don't really swim in the commercial space at all. I'm very much focused on the residential. So I know those transactions and how those have to look in a 1031, but going from supermarkets. My dad owned a supermarket. My dad spent mostly his whole career in the supermarket business. When we were young, by the way, I used to go to his supermarket, and I used to love those big Kaiser rolls on the East Coast, those delicious sandwich rolls. And so I used to go into the big bread bin and grab one of those and eat it. And my sister didn't like the bread so much. She loved the pickles, and they had a giant pickle jar at the supermarket. She used to go and I guess my dad would help her. She wouldn't just stick her hand in there because that's gross. Maybe she did. I don't know. But I think he would get in the plastic bag and give her one of those big dill pickles. She used to eat that thing for days. All right. Nicole says, okay. This means that commercial real estate or investment can be exchanged for residential real estate investments and vice versa. Okay. For example, a shopping center can be exchanged for a multifamily property or apartment building. Boom. Answer the question. Okay. Yeah, real estate, Chris. I'm asking because I'm not feeling confident in brick and mortar retail, looking to get out and focus on residential. I agree. I'm just not a commercial fan, and I have a lot of commercial investor friends who have been moving into the small multifamily and single family space over the past 3 years. Some big commercial investors that are they cannot get the cash flow and the ROI on those types of properties anymore. They can't. They're moving away from larger apartment complexes and they're moving into duplexes. And that's why we've been focused on building exactly those, because of not only the demand, but the upside is there. I always feel like you're always going to need single family homes. You're always going to need duplexes that feel like single family homes, like they feel like single family homes, but side by side. So to me, people love having a yard. They love having space. They love being in the best school districts, and they need a place. Like, they're not going anywhere. Like, you're either going to own it or you're going to rent it. And you're exactly right. You're in this like space right now in like brick and mortar retail you're given to the whims of what's going on in the world, the pandemic, online grocery shopping now for crying out loud, like Amazon fully moving even further now into the online grocery shopping space. We see the explosion of like HelloFresh and DoorDash and all of these other things. So why would you want to go to the grocery store? John, because duplexes, the reason I like duplexes, I consider them almost like single families. The way that we build them are very large. Let me just show you here. So we build them so there's a lot of space. Something I learned a long time ago when I was a young real estate investor, and a mentor of mine used to only buy duplexes. He would buy single families and duplexes. And he would only buy them if they were very large, inside. Because what he noticed from his tenants, when they have more space, they tend to stay a lot longer. The problem with fourplexes is that the units are going to typically be very small. You're not going to get the space that you can get from like larger duplexes with a lot of space. I definitely own a few, properties like that in the 4-unit space and so forth. So I owned an 8-unit, but the tenants were more transient. They absolutely were. And the tenants that you have in a duplex like this is one of the ones we built. We built a whole neighborhood of these. The garages are side by side, so the family living spaces are not. So you don't hear like banging on the walls or putting someone hammering a nail up or music or anything. Like they're separated and they're large, so they feel like single family homes. And they're in the best school districts, so tenants tend to stay a long time. The same thing with the single families, like vaulted ceilings and large space, backyard, etc. And they tend to nest and stay a really long time. So you get tenants in these properties that'll stay 5-6 years or more because they want their daughter, son, or whatever to finish that school district, and they love the neighborhood and it's safe and they love the shopping, the jobs are there, and so they stay a very long time. Charissa C says, okay, good. Charissa, am I saying that right, Charissa? How long should you wait to apply for another loan application after you just closed your first rental property? I just recently closed my first rental investment with Morris Invest and want to get my second by year end. That's a great question. I don't think by year end, I think you should be totally fine. And this is one of those things where I've definitely done loans every month and that hasn't hurt me at all because again, it's an asset. And as long as you're current on your loan payments, the bank likes to, and that's actually a plus. The bank's looking at that saying, oh, they're cash flowing on this asset. They have equity in this property. It's cash flowing and they're paying on time. This is a great client. Oh, I still own a lot of property, Vitali. Yeah, thank you. Pratap says, I don't think you need to wait for a second with Morris Invest. No, I mean, we're going to have, like, our lenders are used to that with us. And the thing is with our properties, they're such good assets that, bank looks at that favorably. It's not like you're buying some random, you're buying cars, that depreciate or liabilities. You're buying appreciating assets in the best school districts in West Texas, in an appreciating area with cash flow and low crime and increased job explosion in an area. Like from a bank perspective that is running their demographic research on that, they're going to see that as a plus. Hedgehog Eraser says, hey, Clayton, what about grants? I told my mom she should write a book on grants because she has to apply for them for the nonprofit. She's a CEO of a nonprofit and she knows all kinds of ins and outs on writing grants and so forth. Grants are great if you can get them. It's just a real headache navigating that process. There are so many grants available out there. You just have to know where to look and how to apply for them and go through that process. There are people whose full-time jobs it is to be grant writers. Huh. It could be just a debt to income ratio thing, Charissa. Like, so I think that's probably the issue. It's just like that's just seeing what that looks like. Ryan Dolan says, do you have any duplexes in? Don't make me wait, Ryan. Do you have any duplexes in? That's a tease, Ryan. Yes, we have duplexes. We're very thorough. When we're analyzing markets, we don't just randomly move into markets. We'll spend, in Pennsylvania? No, we're not in Pennsylvania. It's my home state, but no, we don't do, we don't have any new construction in Pennsylvania. But again, it shouldn't matter what state, I mean, we build only in the best, most landlord-friendly states with the highest upside. So if you're thinking, I live in Pennsylvania, you should watch our videos on why buying properties in your own backyard is a terrible mistake, because most of the time those are not going to be your best rental markets. And you think, I live here, I'll drive by it a lot and check on it. Well, that's no way to invest, right? Real estate investors who understand that you're going to have to invest in markets probably far away from where you live, but that's why you have a great team that's taking care of everything for you. And fly to town, come see the property. Come meet the team, see what you've invested in, see the house, see the land, see the neighbors, see the tenants, meet the property management team. I don't own any properties that I live near. They all are far away from me, but they all cash flow nicely for me every year. So, that's the thing. They don't have to be in Pennsylvania if you live in Pennsylvania. But like I said, if you're interested, you guys want to book a call with our team, we'd love to talk with you for 30 minutes on the phone. Just pick a time that works for you on your calendar, because that's what will happen. So let me show you here on the website. When you come down here and you click on the book a call button, a little calendar will pop up, and you can pick the time based on your time zone, etc. And you pick the time zone and you do your thing. And put in your phone number. Please, please, please make sure you put in your correct phone number. And also, please, please, please make sure you write the correct email address, because what we'll do is we'll send you a confirmation email, and we'll also send you a PDF download that we'd like you to download for free before the phone call. It's our purpose-driven goals worksheet to kind of go through and figure out what your goals are financially. We also ask you to fill out our freedom number cheat sheet. So it'll help you figure out what your freedom number is to live financially free. Like, how many rental properties will it take for you to live financially free? So again, go to morrisinvest.com and book a call with us. Thank you guys so much for joining us today. I really appreciate the time. Hedgehog Erasers, no, we don't do grants internally, but I would check out, there's some books on like locating grants for real estate investing, but I don't know enough about that process at all. I don't know if it would be applicable for real estate investing. I think if anything, it's going to be for like, perhaps building properties in an opportunity zone, or it might also be for you as a first-time home buyer in a property that you're going to live inside of. Those are all things to probably going to be a part of that grant process. But again, I just don't know enough about it. So I think you just have to look into it if that's something you want to go through. But anyway, so thanks to everyone for joining us. I really appreciate it. Thanks so much for subscribing to the channel. We'll see you back here next Tuesday for another live stream. In the meantime, there's so many videos here on our channel to help you get started becoming a real estate investor. I really hope you'll find it useful. Thanks, everyone. We'll see you next time.